Welcome guys, FX Brawler here. This week we're going to talk about this pattern which was discovered by this man several years ago, and basically it talks about the four phases of financial market bubbles. And I think this is important to cover because there's no better time than right now with all what's going on with the markets. We need to cover this ASAP. We're going to do a little bit of background check on what happened in the stock market in the past and how accurate this model really is. And I'm going to preface this by saying that I'm not a financial advisor, and you should do your own research and consult a financial planner before you make any type of trading or investing decisions, because this is a touchy subject. I'm sure I'm going to receive some rocks in the comments saying how wrong I am about what's going on right now. But I've been around the block for a few decades now, and I don't think this time is different. So let's get started. So the theory behind this pattern dates back quite a while, and one of the best cases of this happened in the Dow Jones Industrial Average in the probably the best known financial crisis of the world, the 1929 to 1932 crash. And basically, what needs to be understood about this is that there are four phases, and the first phase is where smart money gets in, and then you start seeing an accumulation. When we saw the four phases of markets in previous videos, so we're not going to go over that again. But basically, this would be coming out of this accumulation phase, and eventually institutional investors start to pick up and they start buying, and then this creates the first markup of prices. And then eventually there's a bear trap when people start panicking a little bit. And if you zoom in this phase, usually you can find a whole pattern on a larger scale, on a smaller scale actually than what we're seeing here. But that's going to be the subject for later in the video. And then eventually media attention gets in, and everybody starts talking about it, and then the public gets in. And this is where you have enthusiasm, greed, and delusion. And then eventually the new paradigm occurs where people are saying, this time is different. And like, this is a new thing, the world has changed, and things are never going to be the same again. And hence, we're all going to be millionaires. And then eventually price starts to go down, and then you have the denial phase where people say, well, it's just a retracement, we're just going to buy the dips. And this is something that we've heard a lot in 2017 if you've been following the Bitcoin debacle. And then you have the bull trap, basically, where people start buying thinking that this is the dip. And then as prices start to go up, then we're returning to normal. Like I told you, this was just a dip. We're going back to whatever number. And then eventually the support breaks. We make a lower low. And this is the point where I think people need to really pay attention and get out if ever you see a bubble of this kind, and then take your chips off the table and just wait it out to see what happens. And then fear sets in, capitulation, people start giving up. Despair is when everybody thinks that this is dead, it's never going to retain value again or make back its way back up. And then we return to the mean, which is the gray dotted line over here. So let's first look at the Dow Jones Industrial Average and that important crisis that we've seen, well, not seen, but we're heard of through history books. So as you can see, I'm not the greatest artist, but I did my best to represent the pattern here. But we have limited tools on this platform, so it is what it is, but you get the gist of it. So basically this is 1922, where everybody was involved in the stock market, and eventually in 1929, which was when the new paradigm shifted, we had the big crash from 1929 to 1932. So these were... it was the Great Depression. People were eating rotten bread, and it was really an awful period of time. And I'm really glad I didn't have to live this in my lifetime. But basically, we can see here the stealth phase where we had sort of a range and accumulation phase, and then the takeoff started. And then eventually we had the first sell-off, and we had the bear trap, another sort of range, and then the media picked up enthusiasm, greed, and this is when the market goes really parabolic towards the upside, and then some more accumulation, and then delusion, where it was the final lift off, and then the new paradigm. Then the first crash, and people were in denial, was like, oh, it's going to go back up, got the bull trap, and then we're just going back to normal, and then fear, capitulation, and despair. And this is the exact point where everybody would have given up and sold everything they own in order to feed themselves. But as it turns out, it was the exact point where people should have bought instead of selling. And there's the lesson basically for the 1922 to 34 crash. In more recent history, and there's been more situations like this, but I want to go over this quickly. Another that's very famous is the dotcom bubble. I didn't trace it here because I'm missing some data, but basically this is the phase where you have the bear trap. This is the new paradigm, like things are never going to be the same again. We've every company that had .com after the name was basically making their way up in price. And then eventually we had that big crash where a lot of the stocks were just paper, actually, and there was nothing of value behind most of the companies that were there. And it took quite a few years before we reached the highs again. If you look at this, it's over here. So 2017. So it took all this time from 2000 to 2017 in order to reach these highs. So imagine being someone that bought some of the stocks. Those that didn't go bankrupt, it took 17 years for you to recuperate your investment just to be flat. So that's a very hard lesson, that if you don't live through that or see it happen, it's very hard to put your mindset to it that the stocks can go down for as long as they did at that time. And I want to share a little personal history here because this was back, I remember this was in 1999. I was living in Montreal, and I was in the subway one morning, and I looked on one of the advertisement, and it was showing an ad from Altamira. I don't think this company exists anymore, but they were basically selling mutual funds, and they were showing the results of the last 1 year, 3 year, 5 year, and I remember that the 1 year showed 100% return on your investment. So basically, by putting your money in one of these mutual funds, you would double your money in a year. And it was something stupid like 60 or 70% over 3 years and 50% over 5 years, year after year after year. And this was the exact top, basically, of this bubble. And this has been engraved in my mind, that when you start seeing ads like this, and everybody's talking about tech stocks and or weed stocks or whatever, it's really something you need to be paying attention to. And then the other example that I want to show you in more recent history is Bitcoin, of course. And I'm going to do another video on this topic specifically. I think it's an important moment to talk about cryptocurrencies right now. But this was the another period in time where we had this exact bubble. And it's at that time that I started my channel, actually. And I started my channel talking about cryptocurrencies, actually. And I was doing a project where I was buying some cryptos every I forget if it was every week or every month or something like that. And I was buying these projects, and then I was analyzing the charts, and I was seeing, well, this is a downtrend. I don't want to buy anything in a downtrend. So after a few weeks of doing this, I just canceled the whole project. I deleted all the videos that were related to cryptocurrencies because I didn't want people to buy something that was obviously going down in a bubble. And I remember it was very unpopular of me to say that it was a downtrend, and people were throwing rocks at me, telling me how wrong I was about even talking about Bitcoin going down, because this could not happen. And I want to show you some examples real quick of comments that you can see from 2017, 2018. So let me just set it up real quick. All right, so let's look at some of the comments. This guy posted this chart 3 years ago, and some people are laughing at him. This again, it's like we've never seen it. So you say we're in the media attention now? He says, no, we're way past that. And then a guy says, no, we're only in the awareness phase. And this guy agrees. And then if you scroll down, a guy, check out the comments on that. That's it. I'm going to leverage my house on BTC right now. That thing is a looming way to go up. And then, this is dumb. You don't understand how to read a chart. We're not even to the first sell-off yet. Currently, we're in Q2 of the awareness phase. Learn to quantify the mean of the global cryptos chart and you can see more clearly. Typical new meme post, nothing to see here. And this is typical. The guy is trying to be helpful. He's trying to say, well, this looks a lot like the bubble pattern. And people are talking to him like he's a newbie and there's nothing to see here, and it's complete denial of reality. And I could go on. And if you look here, this guy here on TradingView, he posted that chart here where it was very, very accurate as far as the top, and then it started to go down. And if you read in the comments here, people laugh at him like, oh, so BTC will go to minus 160. Like, obviously this chart wasn't really well built because it was going into negative territory, but still. And then stop spreading FUD. Like, what else? This is the most retarded I've seen. I won't give a technical refutation because this is pure dog crap. And this is a type of behavior and of discourse that you can expect when you're in a bubble, because everybody's making money, and people are laughing at you because you're trying to help them, but they'll make comment like you're absolutely retarded and it doesn't make any sense. And pay attention to that, because this is really the moment where you should really be rational about it. How likely is it that a sector, if you look at the technology sector here, takes 46% in a year and 170% within 5 years? AMD, 3,600% return. NVIDIA, 1,800% return. And there's no rationale behind these numbers. It's unsustainable. I don't care what people say. You can't convince me that this is sustainable. Oh, it's technology, it evolves so fast, blah, blah, blah. Don't sell me that. Like, I know that this is not going to last. And if you look here, same thing with the weed. And this is another story that I was on a resort, and there was I had a short conversation with an American, and he was, within 4 or 5 sentences, he was able to plug how happy he was to have bought these weed stocks. He bought $10,000 of weed stocks, and a few years later, he made over $100,000 in profits, and he was thanking me being a Canadian, of that beautiful opportunity that we gave him to make all that money. And that was the absolute top. Like, this was the and this also is engraved in my mind, and I think I'll remember it in 20 years. That really quick conversation with a complete stranger, and within a few sentences, he plugs me how much money he made trading so and so stock, you know. And this is another great example of another situation where if you look at some of these stocks in the wheat industry, they went just as fast down as they went up, and within a few years it erased all the profits that they made. And more recently there was another bubble in platinum. Right now I think we're in a bubble in rhodium as well, and right now we're seeing all these Tesla stocks, Shopify, and AMD, and you name it, you know, within the tech industry. And I think we're a lot of people are going to lose their money because people have learned that it's easy to make money with leverage, with options, and buying all these assets that just go up in price. All you have to do is don't fight the Fed, basically. But I think there's going to be a flip to that coin. I may be wrong. Maybe this time is different. We're in a new paradigm, and everything is has changed. But history suggests otherwise. So next video, I'm going to talk about more specifically about cryptocurrencies and about what I've been doing with my portfolio of cryptocurrencies. And I'm going to talk also about how to buy it and how to store it and things like that, because some of my friends have been asking me about this, and instead of repeating myself over and over, I thought I would make a video about how to do it fairly efficiently so that I can refer people, and maybe it's going to help some people that want to get involved in the sector. So I hope you enjoyed this video, guys. Please hit the like button and subscribe to the channel if you haven't, and I'll see you in the next video. Peace, guys.